I'm Jennifer Folsom, Chief of Corporate Development here at Summit Consulting, and this is Complexity Simplified. Today we're wrapping up our two-part series on infrastructure, and joining me today, Brian Oakley from Scully Capital and Anthony Curcio from Summit Consulting. Welcome, gentlemen.
Thank you.
Thank you.
We're talking about infrastructure, which is the subject of Summit's latest white paper. Gentlemen, tell me, what's the role of the federal government in infrastructure?
Well, I think that's a great question, Jen, and I think a lot of people misunderstand. In our federal society, the vast majority of infrastructure is owned and maintained and operated by state and local governments. This is not a function in our society, which is critically important for economic development, that's not really led by the federal government. There's been some notable exceptions with the interstate highway system and so forth.
Sure.
But in the main, the vast majority of our critical infrastructure assets are maintained by state and local government. That's not to say, however, the federal government doesn't have an important role to play. The federal government has an important role to play, and that they can provide capital, that is to say loans, credit capital to those project sponsors, be they state and local governments or even private sponsors. Also, the federal government can set tax policy that create incentives for all sorts of capital to get involved in infrastructure. So really the federal government, the way I think about it, is it sets the conditions for other people to take the leadership role in infrastructure, and it also provides credit at times.
Yeah, and I think those a combination of incentives actually serve to accelerate investment. And so oftentimes you'll see projects that have been on the books for several years, and through the use of the government incentive or a funding mechanism, a project's accelerated and can be delivered faster.
Well, speaking of delivering more faster, I've heard the president use some pretty big numbers when talking about what he would like to accomplish over the next term in terms of infrastructure, like $3 trillion, like with the T.
Actually, $1 trillion, but it's still a lot.
I mean, that's like a lot of money,
Yes.
right? So what advice would you guys give the president in trying to accomplish this?
Yeah, well, first of all, and I said this in our first version, and I'll say it again and add a little bit more, this has got to be an all of the above solution. There's not one tax credit, tax policy alone, federal lending alone, environmental review, reform or change alone is not going to do it. This has to be an all of the above policy. I'll tell you, working in federal credit and federal lending programs, I work with several government loan programs already that have been making infrastructure loans for a long time. They do a pretty good job. And they do things like ports, highways, bridges. They also, they're deeply involved, water infrastructure, community facilities. These are the kinds of things that the federal government is already facilitating. The advice that I would give the president with these ambitious goals, which I think many Americans share, is let's first look at the existing programs and assets the government already has, increase their capacity, focus their direction towards the infrastructure that he and other leaders of our nation are focused on, rather than starting something all over. This is Washington. To create a new loan program, government program, takes years, and it can be very slow, and you can pull your hair out trying to get it done. But the good news is we already have a lot of these programs in place that could be focused, their capacities could be increased, and their directions could be intensified in this particular area.
Yeah, and I think the experience that we've had to date sort of shows where the government can play a role in these transactions. Typically, these programs are lending at a treasury rate, and you're basically financing very long-lived assets. And so the role of the government as the patient investor is actually quite compelling, and I think it's been very effective so far.
Well, and you can't escape our news cycle without hearing something about tax reform. Is there any impact on tax reform for this type of advice that you'd give?
Well, in the current policy proposals, there's a couple things. One, a limitation or repeal of the use of private activity bonds. That actually is worrisome because
Wait, can you tell me what a private activity bond is? I'm not sure I understand.
It's basically a tax-exempt municipal bond that can be used toward a private activity. So if we're trying to encourage public-private partnerships, private activity puts the cost of debt financing kind of equal to a municipal bond.
Sure.
And so if we want an alternative to the traditional local financing of a facility, private activity bonds represent an option. And currently, there's some concern that private activity bonds will be repealed, and we'll see where that goes. On tax credit policy, investment tax credits, production tax credits, those have been very effective at incentivizing investment. What we see there right now, there's a very active tax equity market. Right now, I think those investors are adopting a wait-and-see approach.
Sure.
So near term, maybe it slows down investment. Medium term, it could actually reduce the market because corporate tax liabilities will go down, and therefore the appetite for tax credits will also go down. But longer term, I think we're quite bullish on both the use of federal credit and tax policy to encourage infrastructure investment.
Yeah, one example that I've heard is that in addition to the specific concerns that Brian raised about private activity bonds, whenever you're paying higher taxes and you get a credit against those higher taxes to do something like infrastructure that's incentivized in the tax code, and then the amount of taxes that you pay come down, it's simply not as lucrative. It's not as the incentive is just not as great. So that's a little bit of the downside of tax reform. But as we were discussing before we started taping this session today, one thing to keep in mind is that infrastructure has a decades-long impact.
Sure.
And what we
you
found—
don't build a bridge for 4 years.
You don't. And if you look at the bridges you're driving on today on the way home, they were built in a very different tax equity environment in the 60s or the 70s or the 80s. So while I think it's important to monitor tax reform, and it will no doubt have an impact on near-term decisions, the big picture here is, unfortunately, and this is a little bit gloomy, we don't need to invest more in infrastructure simply because our economy is growing. We need to invest in infrastructures because we're falling increasingly behind. We're going to have to make, as a nation, a chunk of investment just to get us up to parity where we should be, and then continue that to prepare for the future generations. So we are really falling behind. Our, the leaders that came before us in the 50s and 60s were very forward-thinking and generous with their investments. A lot of our nation's investments in infrastructure were made in the 1950s, 60s, and 70s. There were a lot of money spent in those days, and we've got some catching up to do. And I agree with Brian that we're bullish on this because those realities are not going to change regardless of what the tax environment is. So I agree with Brian that we're bullish in that regard.
Absolutely. In fact, I often joke that a presentation I gave at a conference back in the late 90s on water infrastructure investment I could give today, because the problems that
you could pull it up in WordPerfect, right?
Exactly, exactly. And those challenges existed 20 years ago, they exist today, and I think they'll exist in the future. And really the challenge here is how do we accelerate investment over historic levels?
Well, good. Thank you, gentlemen, for joining me. I've certainly learned a lot, and I look forward to digging into this white paper on infrastructure. This has been Complexity Simplified.